Good evening, everybody. Today is Sunday, March 1st. Welcome to March. Quite interesting chain of events happening this weekend. Obviously, everybody's aware that we're bombing or have been bombing Iran over the weekend. But this is the market ahead review for the week of March 2nd. If you are new to the channel, please hit that subscribe button so you can get future notification. Also hit that bell and also hit that thumbs up button and like this video. Go down in the description area and join our Discord community. And just a heads up, there is going to be a minimal charge starting this week to be a member, as well as a little more of a fee to be in the trade room for live trading that happens Monday through Friday from 9:30 a.m. to 11 a.m. Eastern time. So anyways, let's get into the economic data for tomorrow, Monday. We have ISM manufacturing at 9 a.m. ISM manufacturing prices. Let's see what else we've got here. We've got, I don't see anything else there on Monday. Tuesday, you have some Fed speak at 8:55. I don't see anything else there. And then on Wednesday, we data starting to roll in midweek. Non-farm unemployment change, and then ISM services PMI at 9 a.m. And then beige book at 1 o'clock. Crude oil inventories, that's going to be interesting based on what's happening in Iran now. And then Thursday, we start to get some unemployment change claims rather at 7:30 before the market opens. Some import pricing. We'll see how that impacts the markets. Gas storage. And then I'm not sure what's going to happen there on Thursday. But Friday, we have a whole slew of data before the market opens. Average hourly earnings month over month. Core retail sales. And then we have non-farm unemployment change, as well as retail sales month over month, unemployment rates, and then business inventories, and then some more Fed speak. I'm not sure what time they're going to come out, but let's get into the broader markets right now. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and go down to the description area, join our Discord community. So I want to go over some things just to let everybody know, the opportunities that happen when the market gaps up or gaps down. So just wanted to show you here that there, it creates some decent opportunity on both sides here. So here's the ES right now, and this is from December 24th of last year. It was a gap up there, and you could see, you go through the days. Now they don't necessarily fill right away, right? So that was October 24th, and then you could see that gap up actually came back down here and filled on November 3rd, right? So I mapped out a few more. We can go back and take a look at it. Now these gap ups and gap downs, they typically happen on a Monday more commonly because of some, anything that typically happens over the weekend. But we can go back and we can go and look at some more. There are some people that just strictly trade gaps, right? They go and look at the equities and they find out where there's a big gap up or down. I'm going to have to take a wild guess that there's going to be a lot of gaps starting tomorrow. I don't think they're going to be anything too crazy. I think people are pretty confident on the progress that we've made over the weekend with the bombings. But now it's about how is it going to be received, and are they going to be able to establish a new regime over there? So we can start. We can go over to. Let's just keep going. We'll find out on the gap. I think that was on the 16th. Let's see here. 16th. We'll find it here. The 16th of this year. So here we are, the 16th. So here's a gap down rather on the 16th, and it filled 10 days later. So you can see the market, it sold off, and then worked its way hard. Did not fill here on the 22nd, and then finally we got the fill there on the 26th. So you can see, market it creates some opportunities here, right? And so if you have that confidence, and that your markets are starting to track back into that gap up or gap down, you can make your trade book based off of that. So now we can go to another one that I marked off here. I think it was actually no, I think I just marked off two of them right there. So now getting to today, here we are. This is you know, market's not opening yet. Obviously, we have, 20, we got till tomorrow morning till the market opens here. So it's awful. Obviously it's down. I expected the market to be down right now based on everything that's happening because a lot of uncertainty. So now you can have this area. I'm going to get rid of these marks right here. Remove and remove. So now you got a gap down here from 68.73.24. And, the market's trading at 68.19. So not terrible, 60 points. That could be a nice little opportunity here to get those 60 points back, right? But let's get into our levels here. And so you can see we're hovering right now. It's on September's high at 68.14 and a half. That's a pretty decent level there. You can see it right now in pre-market. It's kind of holding up there. I like that level. Obviously, with everything that's happening geopolitically right now, you're going to have to see some signs of a ceasefire in order for the market to really, get going and get up back off to the races. So all this downside is really not horrible. I think it's kind of healthy. It's going to create some opportunities for some buying opportunities, right? So we can start working our way back up to that 7,043, which was the all-time highs there. So that's some significant change there. So, but we are still falling right now, so you have to respect these levels right now. I would say if we lose that 670, 67.90, 675, we come down to 671 and a half. And if we lose that, I think you're going to find some support down here in November 21st high at 67.33 level. Below that, we have 67.03. On the upside, like I said, in the gap up here, if you do get a pop, you may get a little resistance up here at 68.62 and a half. And then we fill this gap. That was the close from Friday, sitting about 68.74. And then you probably might get some resistance there. So it'll be a little choppiness though. I think that once this stuff gets figured out, I think that we could get off to the races, which will be a nice little breather for us. SPY is very similar to the ES on what's happening right now. We are below the 20, below the 50, sitting at 687.68 on the 20, and then it's right pretty much, I'm going to call it the same thing on the 50. But we are still holding on, but we got to see what happens when the market opens up, but we are still holding these key levels here. I do like this regressional trend line level down here at 680, call it 682. That's a pretty decent level there. And then below that, if you lose that level, you have the support down here at 681.21, which is 100-day SMA. And then on the upside, if you regain the 686.37, you could push into these 20-day and 50-day SMAs. And then if you could regain those, I think you can really start making a run and push back into all-time highs. But we'll see what happens and what the market gives us tomorrow. So let's get over to the NASDAQ. Again, if you're new to the channel, subscribe to the channel and hit that notification so you can get future videos that I make. Hit that thumbs up button and like this video if you don't mind here. Same thing on these gap up and gap downs. Just trying to point out there was a gap on October 24th of last year. Let me get back over here and show you where that gap up is. So here's the gap up here on the NASDAQ, October 24th. And you can see it ended up filling on November 4th. So you can just follow this market, from 25,755. It got up, almost 100 points for 1,000 points. Is that right? Yeah. All the way up. And then it came all the way back down. And then it filled on November 4th. So, you got to watch these markets. These gaps will fill. And right now, here's another one from the 16th of this year. Same thing like I showed you on the ES. Right here, it's a gap up or a gap down on the 16th, and it filled on the 22nd. So not too shabby. You didn't have too much sweat on that one, but it didn't. How far did you go on that one? 25,040. Then you rallied back up another about 500 points. So not bad. These are plays that some people you can base your whole trade book off of, and some people make a lot of money trading off of those gap up and gap down. So right now, what we're looking at here for today, it's not a horrible gap down right now from where we were. So we closed at 24,939.25. And we're, a 200 points, 250 points lower right now. Could be lower. I think we got 300 points lower on the worst side so far, but there's a lot of time left till the market opens tomorrow. There could be a lot more news between now and tomorrow before the market opens. So let's get into our levels here and then look at what we've got here as far as our SMA. So we're below. I like this. You know, if the market did pop up to this 25,436.73 level, it's right where this 50-day SMA meets. And I've got this nice little channel line up there as well. And then I think we've got what do we got over there? Yeah, I think we've got a nice little regressional trend line there. We've got the 100-day SMA above there as well, sitting at 25,516.33. So, you know, you got to watch these levels that we're holding right now at 24,680. So, you know, I'm pretty sure everybody's going to be coming in with that, you know, like, oh, the sky is falling tomorrow, but this could be a nice short squeeze that could happen tomorrow. However, we are below these 20-day SMA, the 20-day SMA sitting at 25,098. So we're going to have to push above that. But if we do get above that level here, this 25,152.25, there's a nice little speed zone here. We could push back into the September high of 25,270.75. And if you get through that high, I think you're going to quickly move into this 50-day SMA at 25,436.24. On the downside, we must hold this 24,680. If you lose that, you're going to come down and test this August high, 24,495, and below that, you have July's high sitting down here at 24,300. Below that, you've got November of 2025's low, 24,153.50. So hopefully the market gets a little perk, a little spike tomorrow, and it holds itself up. As far as the Q is going to be very similar. We're below the 20-day SMA, sitting at 609.01. We're below the close. It's sitting at 607.29. You have to regain that 607.29 in order to push into this 20-day SMA. If you do regain this level, I would say if you can regain the 610.12, I think you're going to quickly move higher into this, definitely this lower end regressional trend line, sitting at 613.34, and then push into the 100-day SMA at 614.70. And then you have the 50-day SMA sitting up at 615.82. This is a straight down sell. There's no buyers here, so this creates a nice little speed zone. If you can regain some of these levels, and this level right here, I think the line in the sand to get some upside quickly is 610.12 on the upside. On the downside, if you lose a 603.95, I think you're going to come and test Friday's low at 602.19. If you lose that, you come down, test the 628 monthly low from December. And then if you lose that, you come down and test February's low at 596.46. Below that, the monthly low is sitting at 594.76. And then below that, you got 590.36, which is October's monthly low. And then below that, you have the 200-day SMA sitting at 586.66. So that's pretty much about it for the broader markets and the futures. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button and like this video. Let's get into Tesla. Tesla, I thought we were going to come down and we were going to finally fill some of these point of controls that we had open here, especially this 395.28. I thought we were going to fill that for sure on Friday, but the market spiked up. So it was holding up, pretty nicely. It held this regressional trend line here that I have from the high from December of 2025. So it's still holding that right now. I think tomorrow, by the time the market opens, it's a must to hold this 398.79 level. If you lose that, you come down and test this lower end, midline regressional trend line that I have from January 5th of 2023. And if you lose that, I think you're going to fill this point of control level from February 23rd, sitting at 395.28. And if you lose that, below that, there could be a little support down here at a monthly high. Actually, it's a year ago, as high at 394. So that was February 2025's high. So you have to watch that level if we do pop down there. And below that, you have the 200-day SMA sitting at 390.66. Below that, you're gonna get some downside then if you lose that 200-day SMA. 387.53 is February monthly low of this year. So we could potentially test the monthly low from last month, 387.53. If you lose that, 382.78 is a weekly low from November 10th of last year. And then you have a lower end regressional trend line that I have from the all-time highs set from December 2025, sitting down here at 379.70. And then below that, we have some open point controls from September 11th, 365.90. That's still open. And then below that, 355.87 is a weekly high from September of last year. And then I think the last point of control we have open from September 4th is 333.78. So there's not a lot of support down here. If we lose this, I would say this lower end regressional trend line sitting at 378.42. So hopefully that doesn't happen, but that is it on the downside. On the upside, if we regain yesterday's close, Friday's close at 403.01, I think you quickly move up to this 407.29, which is February 9th's low. You see how we rejected that on Friday, right to the T. So that's going to be a big level. You could potentially reject that again. If you do regain that, I think it could be a nice little speed zone here again. I would say probably come in right at that level there. So 410.19, if you push through that, you may get a little resistance here from this. Actually, I really don't like that level anymore. I'm going to remove that. If you get over that 410.19, I think you're going to push into this level here, this 414.50 level. And this is that line in the sand level that we've had here that it keeps respecting because it also sits just above this 20-day SMA sitting at 413.85. So that pretty much covers the upside and the downside there. So as far as what I'm going to do for tomorrow, as far as my options, what I'm going to be starting out, I'll be starting out with tomorrow's expirations, 405, which will expire, the 405 calls, which expire tomorrow, and then the 395 puts, which expire tomorrow as well. You can see where they closed. The premiums closed at $1.58 on the put side. They closed roughly about $2.98 on the call side. So you can see though, if you look at the trade from Friday, I was actually called in the trading room. I said, okay, well, we made our highs and made our move on the upside, but I said, with the way the market was looking today, it looks like it's one of those days where you're going to get a break on not only the upside, but you're going to get that break on the downside too. And we did, but not as vicious as I thought. I thought once we broke on the upside and we failed to get through this 407.29 level, I thought for sure we were going to come down here and fill this point of control 395.28 set from February 23rd. So that level is still open right now. So it's, we're not that far away from it. So it's very possible that can get filled this week. So that's what I'm going to be having up on my screen for tomorrow morning to start the day. Anything can change as the market moves throughout the day. I may switch and have my expirations for March 4th, give myself a couple days for the market to breathe, so these premium prices don't fluctuate so quickly. So, but we'll tune in tomorrow, and we'll be able to hone in a little better on where the market's going to be by the time the market opens tomorrow. So, again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, go down in the description area and join the Discord community. We'd love to have you. We'll see everybody tomorrow morning. Have a great night, and see you tomorrow.